Thank you. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Carpel. I'm CEO and founder of both companies, and today we're going to have a live trading room open to trade stock and options using our technology. For those of you on YouTube channel, welcome. Please hit subscribe button if you like the content. And this is broadcast of live trading room. The Yellow Tunnel and Tradespoon, the main difference is that maybe with some of the other newsletters out there or IT companies out there is that we provide both the signals, right? We have AI models, we have financial engineers building models, generating signals, but we also trade them. You have Keith, who is a trader. I've been managing my own money for the past, over 20 years. So that's the unique proposition, right? You're in a live trading room where we use signals and models to trade. Disclosures are important. There's risk associated with trading stock or options. So I encourage you to, if this is the first time you see the screen, to visit optionscreen.com so you can understand the risk associated with trading stock or options. And basically, I'm not a financial advisor. I'm here to show you what I do in my own account based on my own risk tolerance level for general education and information purposes only. Right, let's jump into the trading. So first, in terms of model, we have stock forecast toolbox that can help you identify bullish opportunities in the market. And you can enter any stock or ETF, right? You can Spiders, QQQ, Ford, Microsoft, and it will give you prediction, basically the trend analysis, saying that we're kind of not going anywhere, right? We're not making any new highs this year or past couple months of last year. Market kind of trading in this well-defined range. And it sees right now, basically, again, retest of the all-time high 610. We touched it several times, right? Right, we made new highs back in end of November, beginning of December. We retested it again in end of December. Retested it again in middle right here. Fred is here. Right, this is Fred's favorite kind of, there is a term box, like in terms of technical analysis. So it's trading in a box that needs to either go out, get out of this range, right? Every time there is news on tariffs or inflation, right, it tries to break through the support, right? New tariffs, new macroeconomic data that shows the increased inflation. Anytime interest rates rally or anytime dollar rally, you can see market is trying to break through this level. We attempted it in 2025 unsuccessfully. Bulls were able to push it back up. We're back at that 600 level again. So we need catalyst. Earnings are kind of behind us, right? AMD today, got strike out. Who else? Google got a strikeout. Microsoft got a strikeout. Palantir, home run. IBM, home run. Who else hit a home run? IBM, Palantir, Meta, right? Those are home runs. So it's a mixed bag. And so I think earnings, well, we do have NVIDIA earnings. I mean, we had AMD earnings. Semiconductors still underperforming. I mean, NVIDIA has to show that the revenue is continue to accelerate, right? They can't show any slowdown since they have a very high multiple. So I don't know how much impact NVIDIA earnings will have. That's end of February. So now we're kind of at the perception of inflation, right? So when the new administration imposes tariffs, market sells off, and when they reach a deal, market rallies, right? And I think that's going to continue. We do have unemployment data on Friday. It may or may not get us out of this range, right? We don't know. It just depends if it's really big positive or big negative surprise. So for now, I propose what the model says at 610 you sell, 580 you buy, right? Anytime we're above 20 days moving average and 50-day moving average, bulls are in control. Life is good. And anytime we dip below 20 and 50, then bears are trying to be in control. For now, trade what you see. I see bulls are in control. Market is overbought. It's time to trim your long positions, right? If you take some profits off the table, maybe put on a hedge, but something along those lines. Any questions? And in terms of interest rate, 10-year yield down 2%, below 450, right? So we do have the macroeconomic data. We have Fed speakers. So we dip below 4.5. That's bullish for the market. And if market is going to break to new all-time highs, it needs rates to go down. I mean, it's getting to oversold levels. So we have unemployment data, but this is bullish for the market. I think this is bullish for the market. 2%, value is up 75 basis points. Small cap are 1%. So interest-sensitive sectors are reacting to drop in interest rates. And the Busted says something. Let's see. Who said what? I assume. What do we have for macroeconomic data? Wednesday. ADP employment. Still strong numbers. ADP looks good to me. Trade deficit. Oh, maybe services data. What time did it start moving? Four and a half, so about here. So, okay, so I guess it started dropping 4.5 about, well, last night. Okay. So, okay. I don't know if it's probably not anything related to specific data point, but rates are going down, right? I mean, fear of tariffs, maybe that's why. Let's see what it. Reacting to big batch of earnings data, Google Fed loss in mega cap, buying interest in areas, treasury yield low on some safe haven interest in reaction to some weaker than expected services PMI readings for January out of China and Eurozone. Okay. So they attributed to the reaction to weaker than expected PMI readings of January, China and Eurozone, but that's nothing new, right? We know that manufacturing data PMI has been declining in China and Eurozone for a long time. So I don't think that's a big surprise, but this is positive. I still think it's net positive, and you can see it in the price section. So as long as the rate is going to continue going lower, I think QQQ and especially small caps, regional banks, risk on asset classes, Bitcoin, they're all rally, and Nvidia, right? And Nvidia. So that's bullish for the market. Any questions? So also in terms of signals, you can find them under Active Trader or under Yellow Tunnel, depends on which subscription you have. Some people have both. Similar models, Yellow Tunnel, maybe sometimes there is more signals in Aggressive Power Trader. These are short-term signals, Today they're the same. So you have ADP, Cisco, and 5. Right, model detected it last night. So Cisco looks good, breaking out. F5 looks good, trying to break out. What was the last one? Cisco, F5, ADP. When the market sells off, it usually also sells off, but less than the rest of the market. So that's Aggressive Power Trader. This is Active Trader, and you can find them. This model gets updated every day. We post new signals, longer-term signals, weekly and monthly trader, or under Weekly Power Trader. These are the longer-term signals. All right, so let's review the portfolio. Under Tradespoon, you can find them here in the lead circle on the trader log. You can see all of the orders that I have. Pelletier. I mean, I had a good call at the closing bell, not such a good call in the morning bell, because, on Monday, the market was selling off. But there was a very high open interest at 100, and it's still packed to 100. Right. So if you look at the gamma exposure, for my friend Pelletier, $100 was the highest positioning. Right? I mean, we were at 105, we were at 110, but the highest strike before the earning, one of the highest strike was 100, but that was 2 standard deviation. Right? There was 2 standard deviation. I thought it was going to be only 1 in the morning, but at the closing bell, once I had, tariffs, U.S. was able to reach an agreement with Mexico, it rallied, then obviously volatility has changed. So a lot of these earning strategies is just perception of volatility. Is volatility going higher or volatility is going lower? So But the interesting that it's 2 days in a row, it's back to 100 strike. Okay, Citigroup. Let's look at Citigroup. Has stabilized and recovered. We had a pretty sharp pullback. Stabilized at the 20-day moving average. Still a bullish price pattern. It's a March spread. So for now, I'm still bullish on Citigroup. Capital One Financial, also spreads. I'm trying to do both stock and option trades. So credit cards, Visa, MasterCard, strong consumer, and credit cards continue to go higher. Keys like the February 7th Pelletier 198 credit put spread. Well, yeah, credit put spread. So, I mean, same thing. It's kind of, I mean, it's back to 100 strikes, so 198, you're still losing money. But yeah, 100 was the right strike price to choose. I was talking about calendar spread. So if you did the calendar spread at the 100 strike, that worked really well. But I mean, one thing that I put in my notes to kind of just always keep in mind that the best time to place the earning strategies are towards the closing bell, right? I know a lot of people just not at the closing bell. Most people are in the morning bell. But just in the future, I do it in the morning. You know, I propose that if you're still going to be at the closing bell or you have time at the closing bell, do them at the closing bell to avoid these large whipsaws, right? Where in the morning market is down 2% and by end of the day it's up 2%, right? So it's kind of, you know, it obviously changes the volatility significantly. But okay, it is what it is. So Capital One Financial still bullish. General Electric, right? Industrials also doing well. General Electric kind of staying above the support level, so that's bullish. It's a spread. For now, I'm still long. Let's see if I can maybe trim some of these positions. The market is overbought. I'm kind of concerned that if employment is cooling, we could get it. I mean, February usually pretty volatile. I'm always worried about January and February, right? Especially at February expiration, which is coming in 2 weeks. But you know, where's the seasonality thing? I mean, when we have reset, 2023 was bearish, 2024 was bullish, 2021 was bullish, COVID was bearish, 2018 when market was volatile, it was bearish, and then bullish. So February could be volatile, right? If there's some issues in the market, usually they manifest itself in February or start manifesting itself in February, right? So, I mean, it's not COVID and it's not, you know, recession. So let's hope it's similar to 2024, but we'll see. Okay, so then let's see. How are we doing? So BSX, let's see. For you paid subscribers, had a positive earnings so far. It's up again. Consider maybe either trimming your position or maybe buy a put spread to hedge it, but so far it's going in the right direction. What else did we talk about? Citigroup. We talked about Citigroup, so let's see. Citigroup, I'm pretty wide. So Citigroup basically, well, I'm down on Citigroup. The spread, Capital One Financial, break even. General Electric, I'm up. Let's see, General Electric is trading at 375. So it's up about 30%. It's overbought. Maybe it's time to trim it. Well, I mean, you can trim it. If you did one contract, I would just close it. General Electric, I'm going to get out of this trade. So, it says at $4. Let's see, 390. Where was my cost basis? General Electric. $3. So let's see, can I get for 390? Last sale is what? Last sale is $4 actually. I don't know why I didn't get filled. 45, 50, 70, 35. Okay. 385. Okay, 386. Okay. So bought it for 299, closed it for 386. It's about 30% profit. Short period of time, you could, if you have more than one contract, maybe trim half of your position. Otherwise, maybe if it pulls back again to 194, this is the time to buy it again. Any questions on General Electric? Let's make sure we send that alert. So you can enter your phone number, right? And get a text message. Some people prefer emails. So I'm going to send, at least on Yellow Tunnel, send the alert. So close General Electric position. Well, to close. G position. Current price is 385. So to close, where did that? Sell to close 190. 190. Call. Call March 21, 2025. And then, so that's 190, and then buy to close. Buy to close 185. March 21, 2025. Okay, so selling to close 190, buying to close 195, 385 current price, GE position. Okay, that looks accurate. Sell to close. Okay, any questions on GE? All right, let's keep on going. Oh no, alert. Okay, so that's General Electric. Let's keep on going. IWM. So this is a hedge, right? 232.25 hedge. Brett said, I mean, it's overbought. I would watch this level, right? This is the August high, September high, October high, November lows. It's an important level, 50-day moving average. So as long as it's above this level, below this level, I probably would still keep the IWM, especially in front of the unemployment data. So I think it makes sense. The market is overbought, right? Interest rates are oversold, dollar short term, oversold. So it doesn't mean it's not going to go higher. But for now, I think it makes sense to hedge. So I'm still keeping the IWM hedge. And Microsoft, that's out. Let's see how's OK doing. So I do have a stock, some exposure to energy. I think makes sense. I trimmed the position. It did sell off again. It has earnings in a couple of weeks. I mean, it's all about drill, drill, drill. Crude oil rallied and then sold off, right? Especially if there is any, peace agreement in Middle East, right? Maybe United States take over Gaza and everybody lives happily ever after. Maybe, right? So we'll see. But for now, crude oil is down, and I'm waiting for earnings on OK. It's kind of, 200-day moving average is your support. Usually, we're not we made marginal lows, but we didn't break. Still bearish price pattern, still bearish price pattern, but we'll see if it can bounce off of 200-day moving average. So that's OKE, still on OKE share. Pelletier, I selected 94.95. As long as Pelletier is pegged to 100, this is a losing trade. Obviously, if tomorrow, Friday, it sells off to 95 level, then maybe I can recover some of the losses. But for now, it's stuck in that level. All right, PNC and SRE. So regional banks, I trimmed regional banks. Looks like they stabilized right at the 50-day moving average, kind of not going anywhere. So I still have PNC, and what else do I have? And I have SRE. Right at 200-day moving average, so I'm not gonna. This is similar to energy utilities. It's all AI play. This is the risk to the market, is AI digestion, right? If Google is not making money on AI, if AMD is not making money, if Microsoft not making money, if Apple is not making money, on AI, then who's maybe, right? But you could see it's not kind of way, lifting all the boats, right? It's kind of very selective. So for now, I'm kind of, and energies in that, whether it's utilities or gas, it's kind of in the same bucket. For now, it's down. Tesla and Texas Instrument. So Tesla, sitting at the support level, it's down 4% again. If it drops through this level, I would suggest to get out of the trade. I closed the put spread, so I'm not hedged anymore after the earnings. So I'm watching the support level on Tesla. And same thing with Texas Instrument. I'm kind of waiting to see if this support level holds and it's able to recover. So those are all the positions I have. Any questions? Alon, Brad, Fred, Patrick, Ted, Michael, Steve, anyone else? Nice, Fred. Okay. That's good. So yeah, if you have more than one contract, maybe close some and leave some on, but it's... So let's see, semiconductors are up 2.5%, Spider is slightly higher, small caps lead, high beta leading the market. Silver, strong uptrend, trying to break through December highs. Gold is in strong uptrend, new all-time highs. So that trade continues to work. Google sold off, crude oil pulling back. Nvidia is up. All right, BSX, let's go. It was at 107. We need one more push on BSX. BSX, let's go. All right, what else? Earnings, okay. Let's see. Amazon, right? Where's Amazon? Is it today? Yep, Alibaba. So Ford is after the close. Qualcomm. SW MetLife. VSX. So Amazon tomorrow after this is Amazon. LA Lilly tomorrow, Bristol Myers. Philip. Nothing interesting. So Amazon, we have Amazon. The last of, well, not last of Magnificent Seven, but last one until we hit NVIDIA earnings. We do have ARM and MicroStrategy. ARM, nice rebound. So ARM is holding on, probably one of the better stocks. And MicroStrategy, popular stock. But pull back after this vertical move up, right? We talked about this gamma squeeze. All right. Well, let's see if anything stands out. Stock. So let's look at the expected move. Did Keith talk about 17%? But this is a home run, 47%. Then this is kind of 15%. So this thing is volatile. This is only if you have a great appetite for volatility. So it looks like 200 stands out, right? People are betting that it's going to hit 200 or it's going to drop to 140, 120. Right? One or the other. I definitely don't want to be short volatility. So I think it's going to fly like AMD or Pelletier. So probably AMD, not AMD, ARM. The calendar. Okay, this week, February 14, and I'm selling this week, February 7. Okay, let's target strike 200. Maybe it'll be similar to ARM, to standard deviation. Pelletier, sorry, Pelletier. So I'm targeting strike 200. 1 second, give me 1 second, sorry guys. Give me 1 second, I just need to come back in a few seconds. Thank you. Sorry, guys, I apologize. I had some internet issues, so I think I'm done for today. I mean, unholding is the only thing that I'm gonna do. 200 strike calendar spread, basically buying February 14, selling 200 for 80 cents. But other than that, you know, let's keep an eye on the market. And sorry, I had some intermittent internet issues, and I have to take care of them. But I'll see you guys tomorrow morning. Tomorrow morning, bright and early. So, option on AMD. I mean, AMD already had earnings for now. I mean, the reaction is down, so new lows. So I would sell into the rallies on AMD. I mean, it's oversold. I don't know if there's any stability in AMD. I mean, next level is 100, right? 100 or 95. So AMD, Texas Instrument, that doesn't look good, right? At least Texas Instrument had some support. AMD looks even weaker than Texas Instrument. About ADP 300. Yep, that sounds good. ADP idea worked. All right, Fred. I'm glad ADP worked. All right, guys. Sorry to cut it short. Sorry to being late, but you know, I had some internet issue, and Comcast needs to fix it. So tomorrow morning, hopefully, will be better. Thank you. Have a great day.